Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Ritu Singh. These are the top headlines from the startup world. Supreme Court issues notice to Meta over proposed 5-year advertising ban on WhatsApp, questions 2021 data sharing policy, next hearing on the 19th of April. The Cheesecake Factory Bakery to debut in India via the Gourmet Cafe plans 55 outlets with $60 million investment, targets rupees 200 to 250 crore rupees in revenue in 5 years. IA Alpha Fund leads $3 million round in Mojro, SaaS logistics platform to expand in US and Southeast Asia, strengthen AI-driven optimization stack. Peak 15 closes $1.3 billion in new capital across India Seed, India Venture and APAC funds to double down on AI, fintech, consumer and deep tech. LiveSpace cuts 1,000 jobs at 12% off the workforce in AI-led reorganization. Co-founder Saurabh Jain exits after 11 years.
Well, in what's brewing today, AI vibe coding startup Emergent has achieved a staggering annual run rate revenue of $100 million in just 8 months since its launch, doubling the revenue in just 30 days. One of the fastest AI native platforms globally to reach this milestone. Now, at a time when India's AI ecosystem is debating foundational models versus application-led disruption with players like Sarvam AI pushing sovereign AI, Emergent is taking a different route, enabling anyone to build a full-stack app using autonomous AI agents. 6 million builders, 7 million apps, and now a mobile launch that takes app creation beyond the desktop. Now, what's behind this lightning growth speed and can it sustain? That's the question we're going to be asking its co-founder and CEO Mukund Jha, who joins us now. Mukund, always a pleasure to have you here. And let me tell you, Emergent was very much the talk of the town at the AI Impact Summit last week. So we're very happy to have you join us here. You know, you've crossed this $100 million in annual run rate revenue at a pace which investors like Vinod Khosla are calling unprecedented. You know, so what's driving this hyper acceleration, and do you expect this kind of growth to sustain?
Yeah, I mean, we believe that there is a lot of latent demand in the market right now. And the market that we are opening up is a net new market, like where for the first time, people who did not have access to development resources, people who could not build software are now coming into the economy, building software. And I think it's just the beginning. And as AI sort of progresses, as platforms improve, we will see a lot more significantly higher revenue ramp-ups.
Well, Mukund, break down that 100 million revenue run rate for us. How much is enterprise? How much is individual builders? How sticky are the customers? Because you've onboarded 6 million builders globally. What percentage of them are actually paying, and how are you able to improve the monetization per user?
Yeah, so roughly most of the users who are coming to platform today are small, medium business owners who are trying to digitize their business. These people would have gone to a dev shop to create a software, and we are bringing down the price point. So typically they would have paid $500,000 to build a software. Now, on Emergent, they can get away with like $1,000 to $5,000 to build the first version of their software. And that's why we are seeing a significant, expansion of TAM, and a lot of people are sort of coming to the platform and using it. We do not have enterprise motion yet. We are still sort of starting to work on that now, even though there is a lot of demand from enterprise. A lot of the revenue, most of the revenue today is coming from small, medium business owners, solopreneurs, dev agencies who are using us to accelerate their workflows. And in terms of like the margin and other things, we have pretty good margins right now on the business, and we are seeing the margin also expand. And retention is also holding up pretty well, even though the growth is accelerating for us. Like our retention number looks pretty strong.
Well, in that case, let me ask you, how soon do you think you'll start to serve enterprises then, and what should we watch out for next in your launch pipeline?
So there are a bunch of things that are coming. Enterprise is definitely something that we're going to look at in near future. Right now, we're very focused on just getting these users to success. We're also going to significantly expand the offering on the platform, and a lot of users actually, once they build a software, like they want to now distribute the software, they want to grow their business. We will be helping them do that. There's also significant push on the mobile side for us. Like mobile growth has been significant for us, so we're going to invest on that. We also launched this OpenClaw molded bot on the platform that has been growing very fast for us. And I think as the AI sort of progresses, you'll see us launch a lot of new things in the store in the coming weeks. But as we get closer to the launch, we'll reveal them.
Well, tell us about this mobile app you've launched for iOS and Android that lets users create apps and publish them directly onto the App Store. How widely is it already being used, and what kind of additional revenue generation can this unlock for you?
Yeah, so we launched our mobile app in beta roughly about a few weeks back, and it's already contributing to roughly, 8 to 10% of our revenue growth right now. And we are seeing significant demand in the market where people want to build mobile apps. We have made it really, really easy for them to build, download, publish these apps. Today, we are probably one of the best mobile building experiences on the platform. And because most of these agents now actually run for much longer time, the build on the go experience has been, like something that is ramping up for us really, really well. And it is also like adding net new sort of audience for us, like people like, who do not have access to laptops, people who want to build on the go. We expect this to continue to grow really rapidly for us.
Well, that's significant adoption. So, Mukund, let me ask you then, how soon do you get to the next 100 million at this rate?
Yeah, I think growth rate is accelerating. Like we don't have any forward-looking projections right now, but every time we make an announcement, we see like our growth rate jumps even higher, and we think that there is extreme amount of latent demand in the market, and as we continue to deliver on the promise of people being able to ship production-ready apps, we expect this ramp to continue and even sort of accelerate for us.
Well, let me also address this growing chatter around how AI can disrupt traditional IT services and jobs altogether, because where do you stand on this? Apps like Emergent, they're enabling non-technical founders to build full-stack production apps in weeks. So do you share this view that this is going to fundamentally reshape or even replace large swaths of traditional software development?
Yeah, I feel that there's definitely like a massive job displacement that's going to happen in the near future. I think the role of people building software today is going to evolve to becoming more product owner, becoming more architects. But at the same time, I expect the economy will also sort of expand rapidly, and at least for the short time we'll see demand increase. But as AI improves, like I feel that a lot of these jobs will definitely get displaced, and we will find newer things to do. Good thing is that like I think economic growth will sort of help us, counter some of these things.
Okay, Mukund, we'll leave it at that. Thanks very much for joining it, and we wish you and Emergent all the very best for your future endeavors.
Thanks a lot. Thank you.
Thank you, Mukund.
And moving on, in a country where over 230 million Indians trust fixed deposits to safeguard their savings, one fintech is betting big on making safe money smarter. Stable Money, the digital fixed income platform, has just raised $25 million in a pre-Series C round led by Peak 15 partners, taking its total funding to $65 million in just 3 years. With over 50 lakh users and more than 5,000 crore rupees invested through its platform, the company is now looking to double down on product expansion, bank partnerships, and even offline presence. But can fixed income truly become venture scale? Joining me now to discuss this further, Saurabh Jain, the co-founder of Stable Money. Saurabh, thank you so much for taking time out and being here with us on Startup Street. Stable Money was built around a simple idea, right? That fixed income in India was trusted, but not modern. So take us back to that moment. What gap did you sort of see in how Indians were saving, and why did you believe this was a venture scale opportunity?
Yeah, see, I think FD is the largest asset class in India, and we have almost 18 crore Indians who invest in FDs. But if you see last 4 or 5 years, the entire innovation on the tech side has always been on the mutual fund and the stock side, because that is giving a larger upside to a lot of users. But we have realized a large set of users still prefers to put 60-65% of their investment into fixed income product and largely in FDs. And the basic awareness about the DICGC insurance, opening a fixed deposit without a savings account, those features was not available to those users. So we thought nobody was taking this positioning in India. This will break the clutter and you can reach out to the larger audience. And that's how we started.
Sure. And you've raised this $25 million in funding, right? So how do you plan to use these funds? Any new products in the pipeline?
See, we have realized now in the last 2.5 years that now we have figured out the product market fit. We know what is the exact communication. 60% of my user base comes from a tier 2 city. So idea is to grow this significantly, reach out to the more audience and tell them about Stable Money and the features that we have. That's the larger spend that will happen from this funding round. The second most is innovation on the tech and the product side. We are launching more products. So we are trying to get US Treasury bills onto the platforms. We're trying to get into REITs and InvITs products as well, because those are mostly fixed income product. And also we're trying to build more bank partnerships and offline partnerships, because FD is still a very high trust product. We feel that though you are present online, it's good to have an offline present and build relationship with the customer, especially in the tier 2, tier 3 city. So these are the three large segments where the money will be spent.
Sure. So the large segments where you're spending the money, another question that you have about 50 lakh users, 5,000 crores in investments, but fixed income is fundamentally a trust business. So how are you sort of scaling this aggressively without diluting that trust first positioning? But also, the other question is you're catering to the tier 2 market, right? How are they sort of understanding all of these new, tools of investing?
See, I think first question on the trust, I agree that trust is a slow compounding thing, and that works as an advantage to us as well, because nobody with a large capital can come and start building and disrupting the business that we have built, because it takes time to build that trust. And what we are trying to do is through brand awareness, through a lot of education content, we're trying to build that trust. Offline is also one of that attempt for us to build more trust with our users. So that's one place. On the tier 2, tier 3 cities, I think we have already realized that a lot of people have gone from traditionally reaching out to an insurance agent or an LIC agent for all their advice on the wealth side. They're consuming a lot of content on how the investment should happen. These people are more aware. I think just reaching out to those users with a more tech-enabled platform is the goal that we have, because these are the users who are using Swiggy's and Zomato's of the world, Ola and Uber's of the world, so they understand how the tech product work. It's just that investment is slightly new to them. I think we are the first one, and that's another reason why we feel that we have a great opportunity to do that. Is FD is a product that is very well understood. It's a very trusted product. And if you start with that, the relationship becomes much stronger. We have seen the customers who have started with fixed deposit onto us have moved on to buying bonds, gold and silvers onto the platform as well, without them knowing about these products much before they started doing fixed deposit. So I think that's how it compounds.
All right. So it's sort of compounding in terms of, what they trust you with and where they're willing to invest. But you kept pointing out that offline expansion is really key, right? So if you could tell us what the scale of this offline expansion is going to be, take us through, the areas that you're currently present in and which geographies you're looking to expand into, or which states that you're looking to expand into with your offline presence.
Right now, we are only present in 3 cities. It's a very early experiment. We are present in Kolkata, Delhi, and Pune. But I have done Swiggy and I have launched Swiggy to 500 cities. I feel if Swiggy and Ola are the companies which can be in 500 cities, fixed deposit can go beyond 1,000 cities and towns in India, because wherever there is a bank branch or the people from different cities or towns who are doing fixed deposit, that's our potential market to go offline. The only question is, what is the playbook? How do you do it very cost effectively? I think that's what we're trying to figure out this year. But once we figure the playbook for reaching out to a tier 1, tier 2, tier 3 cities and beyond, I think the next year we'll keep pushing the pedal on scaling these cities.
Absolutely, because physical expansion sort of puts pressure on the margins, right? So for this year, how many outlets are you looking to open, and which will be are you going to remain in these 3 cities or maybe a few beyond it?
No, we're trying to get to 8 cities, the top 8 cities in India. That's the plan for this year. Obviously, the initial 3 cities that we have launched will scale to a much higher number. Other cities will be in very initial phases. But the tier 2, tier 3 cities expansion will start happening from the next year.
All right. And, before I let you go, where are your revenues at? What are you looking at for this year? What are the targets you've sort of, put for yourself for this year?
So we are currently at a 5 million ARR. This has gone almost 10x versus how we have started the year. But our idea is to triple the revenues by this year end and go from a 5,000 crore AUM to a 15,000 crore AUM by December.
So 15,000 crore rupee AUM by the end of December. And profitability?
It's very early stages for us to talk about profitability. But see, honestly, on the Excel, the profitability looks 2 years down the line.
All right, so 2 years down the line. All right, we'll stay in touch with you to see how the business grows. And if you make it to those 1,000 cities, if you believe Ola and Uber can do it, then you can reach a larger audience. So we wish you all the best on that journey. All right, Saurabh, thank you so much for taking time out and being here with us on Startup Street.
Thank you.
And moving on, it's time for us to head into a short break. But coming up, lab-grown diamond jewelry brand Ethera bags 25 crore rupees from BlueStone to accelerate retail expansion and brand building. We put the firm's co-founder, Sharad Arora, on the hot seat to decode Ethera's future plans. Stay tuned. Welcome back. You're still with us on Startup Street. India's jewelry market is witnessing a quiet but powerful shift. Lab-grown diamonds, once a niche alternative, are now emerging as a $500 million opportunity, growing at nearly 40% annually. At the center of this surge is Bengaluru-based Ethera, which has just raised 25 crore rupees from BlueStone to accelerate retail expansion and brand building. With 5 stores already operational and an aggressive design pipeline, Ethera is betting that the modern Indian woman wants diamonds she can wear every day, not walk away. But as legacy jewelers enter the lab-grown space, can new age brands hold their edge? Joining me now to discuss this further, Sharad Arora, the co-founder of Ethera. Sharad, thank you so much for taking time out and being here with us on Startup Street. You know, like I pointed out, India's lab-grown diamond market is growing at 35 to 40% annually, right? What structural shift are you sort of seeing in consumer behavior that convinces you this isn't, just a trend, but sort of a lasting category shift?
Sure. First of all, thank you so much for having me on, Arundhati. It's a pleasure to be on the show. So as you said, right, so there are broadly 3 or 4 macro trends which we are currently seeing playing out, right? So first one being rapid urbanization and workforce mobility, right? So India is witnessing a large scale migration from smaller towns to cities and metros, and as more and more people enter the workforce, this shift is increasing the demand for national trustworthy brands that people can resonate with, right? Aspiration is increasing. Everyone wants to buy from brands now. But the value consciousness is still there, right? India is not a cheap market, but it's a very clear value conscious market, right? People will pay as long as they see value in it. As far as if you translate this to jewelry, as and when more and more of this workforce mobility happens, we're seeing that people are going to lose touch with their family jewelers, which they or their parents used to buy from. That in which further increases the importance of more and more brands coming in, national brands coming in. Right. The second that we are seeing is a rise of non-bridal and everyday jewelry. Millennials and Gen Zs today are moving away from heavy occasion-led jewelry. They are not looking at jewelry as an investment, as you said, which is supposed to be stored away in lockers, but rather they're looking, they prefer minimal, versatile pieces that can be worn daily without the guilt of over-investing or, the fear of losing that expensive piece of jewelry. Also, people want to refresh their jewelry more and more frequently to match their evolving personal preferences. And the third trend that we are seeing currently is personalization over mass uniformity, right? Personalization is becoming, customization and personalization is becoming more and more central to the overall shopping experience. Customers no longer want to wear what everyone else is wearing. They seek jewelry which reflects individual identity, but also that comes with a shopping experience that feels more and more flexible and personal, right? There are a lot of customers, for example, who walk into our stores with a design already in mind. People exactly know what kind of jewelry that they want to design, right? So all of these things are things that we are seeing very rapidly changing the entire way jewelry is being bought or perceived in the country today.
Sure. And, you've raised this 25 crore rupees, right? So if you could tell us, how do you plan to sort of spend the money? What's on top of the agenda? Where will these funds go?
Absolutely. So there are 4 broad areas where we are going to use most of the funds. The most important being retail expansion. As you said, we currently have 5 stores live present across 4 cities, which is Delhi, Noida, Ghaziabad, and Bangalore. We have 4 more stores which are currently under construction and will be live by the mid of next month. So that will be 9 stores. Majority of the funds are planned for further retail expansion. There are multiple more stores which we've signed all over the country. We've signed Jaipur, we've signed Pune, we're currently looking at Hyderabad and a couple of other cities like Lucknow, etc. So most of the funds are going to be planned for this retail expansion. The idea is to have about 18 to 20 stores live by the end of this year. Besides that, we're also looking at utilizing the funds for, further strengthening our tech stack and utilizing the funds for hiring and marketing.
So you're looking at opening these 18 stores by the end of this year, right? So if you could sort of explain to us what your omni-channel strategy is going to be, and where do you foresee most of, your business coming in from, the online channel or your physical presence?
See, the way we see it, jewelry is neither especially fine jewelry is neither an online only play, nor is it a very heavy retail play. Jewelry is a very strong omni-channel play where we feel that every touch point in the customer's journey, right from the point where a customer sees an online ad to when the customer lands on your website and interacts with your, let's say the online chat team, to the to the time when the customer walks into a store, that entire journey needs to be, that entire experience at every touch point needs to be seamless, which is where omni-channel is the way to go. So we as far as most of our business coming in, we feel that from a value standpoint, majority of the business is going to be online. Let's say what we are seeing with more established brands like BlueStone, CaratLane, we see that about 85 to 90% of the business comes from online, remaining comes from offline. Sorry, remaining comes from online. But online becomes an extremely important channel with respect to feeding into that customer base and getting them to the stores and experiencing. Right, jewelry is not a category which can be bought online, as I said, only because the inherent nature of the category is where people want to look and feel and how that jewelry feels on their body. They want to. It's a very touch and feel category. So we expect most of the conversion to happen offline, but online feed becomes an extremely important channel to feed into that offline conversion.
Sure. Online is what the people see, and then they're like, okay, maybe I want to come to the store and check out, how it looks in reality. But, legacy jewelers and large traditional diamond houses are entering this lab-grown segment, right? So how does Ethera plan to defend its stuff? How are you going to keep innovating to sort of bring the customers to your store?
Sure. See, firstly, I think it's a great thing that legacy players are entering into the industry. Tata coming in with Beyond gives a lot of credibility and visibility to the overall lab-grown space. One of the biggest challenges that the lab-grown industry faces today is educating the customers on what the product actually is, right? So players like Tata entering into the space gives a lot of credibility, visibility, increases a lot of trust for the for the customers towards the entire industry and product, right? Anyone who thought that lab grown may be a synthetic product, who was on the fence thinking that lab grown may be something synthetic or not real, will now start understanding and accepting that lab grown is the exact same thing as a mined diamond, right? It's just is the location or the place on which at which the product was formed, which is different. It has the same physical, chemical, and optical properties as a mined diamond. So firstly, I think it's a great move. Lends a lot of credibility and creates a lot of awareness for the entire industry. Makes it more mainstream. As far as Ethera competing or defending its stuff and differentiating with legacy players, there's no fancy answer to this. The way we see it, there are two things that can be the biggest differentiator in this space: great designs and a great omnichannel experience, right?
Yeah.
The idea is simple, but it's the execution which becomes challenging. It all depends on how well you execute. Jewelry has always been a desire-based purchase. It is not a necessity. People don't buy jewelry because they want to. They have to, right? They buy jewelry because they want to, which is why design sits at the very heart of the category, followed closely by a trustworthy omnichannel experience. And that is exactly where we have been focusing on from the very first day. At Ethera, design and the people behind each creation comes first. Every piece that we create is basically with a single uncompromising objective that one, the piece must be beautiful, and the second is that it must make the wearer of the jewelry feel beautiful. We pride ourselves on building one of the strongest and most contemporary design collections in the market. Our teams are continuously innovating and adding more than 200 designs every month on our website. We currently have more than 2,000 designs already live. And this is where we have been, building a lot of capabilities in-house. We are one of the very few brands in the industry who have in-house designing as well as in-house manufacturing, which is
you've got in-house designing, manufacturing, and you've got 2,000 designs on your platform. That is how you're getting your customers. But, Sharad, we're completely out of time. But thank you so much for joining us on the show, and we wish you all the best on this journey going forward.
Thank you so much, Arun.
And with that, it is a